Thank you, sir. Um, Sir,
Yeah,
um,
please.
shall I start the session?
Yes, madam. Yes, please start, madam.
Thank you. So, a very good evening to all the faculty, the students, and the other attendees who have joined today's webinar, which is an awareness program on the stock market. Before I continue, I have a humble request to all the participants. Please put up your name in the chat box. I shall be using that set of names as the attendance of today's session. So I have a humble request to all the students, all the participants. Please put up your names in the chat box. Um, I shall, we will use that as the attendance for today's session. Uh, my name is Marina and I represent the company called BSc Limited. As students, we are all very familiar with the name Bombay Stock Exchange. Well, Bombay Stock Exchange, that was the name we were using many years back. Right now, officially, we only use the name BSc Limited. So when the students, when you are writing the exam, uh, if you have to write something related to BSc, you can mention BSc Limited, and in brackets you can write formerly known as Bombay Stock Exchange Limited. So right now we use only BSc Limited. Um, Today's session, today's webinar, the purpose of this webinar is it has two purposes. There are two reasons why we have set up this webinar. The first is the first reason why we have set up this webinar is to explain to the students, to explain to all of you attending here that we do not need to rely a lot on ratios or fundamental analysis or technical analysis before we can choose or before we can identify a company for the purpose of investing. You see, there are so many people out there. There are so many people who are of the opinion that we need to use all fundamental analysis, technical analysis before we can decide which company to buy and which company not to buy. Well, I have, if you know to use fundamental, technical, all these ratios and all these formulas, if you know to use these formulas and if you know to use these ratios, please go ahead and use them. But what about those people who do not know to use these ratios? What about the doctors? What about engineers? What about your English lecturers? Do they know to use these ratios? English lecturers, do they know how to use technical analysis? What about your Tamil lecturers? Do they know to use technical analysis, fundamental analysis? No, they do not know to use it. So should we tell them, all right, you have no right to invest in the stock market? Should we say that to them? No. Everybody has the rights, and everybody should be equally eligible to invest in the stock market. So there are so many other ways you can identify or choose or select a company for the purpose of investing without depending on any of these ratios. So, or ratios or formulas or analysis, you can identify a company for the purpose of investing. So today, in the first part of the webinar, I shall explain to you how to identify a company, for the purpose of investing. I shall explain to you how to identify a company for the purpose of investing without having to rely on this analysis or technical too much technical knowledge. Basic how to identify a company. The second purpose of this webinar is to remove this fear that people have when it comes to investing money in shares. If you speak to people about investing money in shares, you will realize that a lot of people, they are earning money, but when it comes to investing that money in shares, they have a fear in their mind. They are reluctant. They hesitate to invest money in share in the stock market. Why are people afraid of investing money in stock markets? Why are people afraid? I will tell you why people are afraid. A lot of people in India have invested money in the stock markets. Unfortunately, most of them have lost that money. And because of this, because many people lost money in the stock markets, now so many other people think that stock market is a place where you will lose your money. Why did they lose money in the stock markets? Let us first try to analyze why did they lose money in the stock markets. If you study the investment pattern of those people who lost money in the stock market, you will realize that they all committed the same set of mistakes. So today in my webinar, the second purpose of my webinar is to highlight the mistakes that investors have made and which resulted in them losing their money. So today's session has two purposes. One, stock market should be open to all. So there are ways you can select a company without relying on too much technical knowledge. Secondly, we wish to remove this fear that people have in the stock when it comes to investing money in stock markets by explaining to everyone that these are the mistakes. So second purpose of the webinar is to highlight the mistakes that people have made while investing in shares, and because of these mistakes they lost their money. So I am going to share my screen now. I request sir.
Yeah, you can present.
I request Pranam Shiran sir.
Yeah,
That
you can present, madam.
yes, please confirm one more time, sir, if you can see my screen.
Yeah, you can present, madam. Yeah, it is available, madam. It is visible.
Okay, sir.
Okay.
Okay. All right. Okay. BSA, we have been around for a very long time. BSA, we have been around for a very long time. We've been here since 1875. The picture you see on the right side or side of the screen is the picture of our head office here in Mumbai, and very very proudly we say that this is the most recognized corporate office in India, which when we say most recognized corporate office in India, what we mean is if you show that picture to anybody, and just about anyone in India will be able to recognize that picture as the picture of, that is the photo, they will tell you, this is the photo of BSc head office in Mumbai. My dear students, am I right? This picture, is it, will you recognize this picture anywhere? as BSC's office in Mumbai? I hope I am. That is because that is what we say here in Mumbai. So I hope I think we are right. I think we are right in saying that it is the most recognized office in corporate office. All right. Um, before we move into, just before we go to the straight into the webinar, I would like to introduce to you three accounts that you will need to open if you want to invest in shares. So there are three accounts that you have to open if you want to invest in shares. The first is a bank account. You all know a bank account is an account you open with the bank. Why do you open a bank account? You open a bank account to keep your money. Similarly, a demat account. What is a demat account? A demat account is an account you open to keep shares. You can only do two things with your demat account. You can either put in shares or you can take out shares. You cannot do anything else with the demat account. So demat account is for the purpose of keeping shares. You can put in shares or you can take out shares. A trading account is the account you use if you want to buy or sell shares. Many students have told me we use demat accounts to buy and sell shares. No. When you want to buy or sell shares, you use a third account called the trading account. And trading account is for the purpose of buying or selling shares. So these are three different accounts with three different account numbers. And when right now, since we are in that, we all like to do transaction online. When you open these three accounts, you will be given three different usernames and password. Why? So that we can do our transactions online. Okay. Investing means growing your money. That is the meaning of investing. There are many places in India where you can grow your money. Many places in India where you can invest, grow your money. I have put up some names on the screen. Shares is one place where you can grow your money and you can enjoy a very good returns on your investment in shares. You can enjoy very good returns on your investment in shares, as much as 15 to 17 or even 20% returns on your investment in shares without having to depend on any technical formulas or ratios, without any too much technical knowledge. You can enjoy 15 to 17 to 20% returns by by just applying some very basic reasoning. So how do we identify or how do we choose a company for the purpose of investing? How do we choose a company for the purpose of growing our money? So we want to grow our money by investing in a company. So how do we choose those companies? How do we identify those companies? Let us let us come out of this investor awareness program, and let us imagine that you are. Let's imagine you are sitting in the living room of your home, and a very close friend of yours walks in. This friend tells you. So this friend, very close to you. This friend works in a company called Company A. This friend walks in and tells you, you see, my company, we want to expand. And so we are looking for investors. we are looking for people to invest money in our company. You know company A very well. You know that company A is a company whose products are sold across Tamil Nadu. You know that company A's products. You have seen company A's products outside Tamil Nadu also. You know this company is doing very good business. This company is making profits. But still, you tell your friend, please give me some time. Let me think about it. Then I will let you know. So your friend leaves. Somewhere late in the evening, another friend of yours comes to you and tells you, I work in company. That friend tells you, you see, my company B. We are looking for investors. And then I thought about you. So your second friend is telling you, why don't you invest in my company? You know company B very well also. You know that company B is a company that is not doing good business at all. You know company B is a company that uh, they have not paid salary to employees last 5 months. You are almost very sure it is making loss. Tell me, my dear students, which company is more beneficial as for an investor, company A or company B? Any one students can unmute and tell me. Students?
Yes, madam. Proceed.
Okay, thank you. Okay, I'll proceed. All right. You will all agree with me if I say company A as an investor, company A will be more beneficial to you to invest your money. Well, exactly the same logic, the same reasoning needs to be applied while investing in shares. Please keep in mind there are so many companies in India. Will you agree with me if I say that all the companies in India are doing very good business? All the companies in India are making profits. All the companies in India are, doing extremely good business across India. Will you agree with me if I say that? Well, no, definitely not. Not all the companies in India are doing good business. Not all of them are making profits. So only some of them are doing good business. Only some are making profits. So as an investor in shares, when you want to invest your money in a company, you must identify the companies doing good business here in India and invest only in that company. These are the companies doing good business here in India. These are the companies that will help your money to grow. Not all the companies will help your money to grow. Only the companies doing good business in India will help your money to grow. So you should identify the companies doing good business and invest only in those companies. And how do we identify those companies? Go online. Go online. Search the net for the performance of the companies. Uh, when you are searching for the performance of the companies, there are some basic minimum information we expect you to get. And just study those information. There is a basic minimum information that we expect you to get. We expect you to just study that information. By studying that information, you will be able to identify whether the company is good or not. What information do we expect you to get? We expect you to get information like the growth in the sales, the growth in the profits, the dividends. Growth in sales, which means we expect that company must have Not just sales, but the company sales must have grown every year. The company sales should have increased every year for the last, at least for the last 5 years. The company's profit should have increased every year at least for the last 5 years. So getting information about sales alone is not enough. Getting information about profit alone is not enough. You must look for the growth in sales and growth in the profits. And you must look for dividends. Did the company give dividends to the stock shareholders? Uh, all this information is available free of cost online, and you can get it from the website of the company. You see, when you visit the websites of different companies, the website layout is different. You all will agree with me. Each company's website layout is different. Uh, uh, this particular information that I wanted you to get, we'll call it financial results. Some companies will give you financial results on the top of the homepage of the homepage of websites. Some companies financial result is on the bottom of the homepage. Some companies it's on the left side of the homepage. So when you are visiting the different companies' websites, you will have to search for where is this information. Is this up? Is this on the bottom? Is it on the side? So where is this information? Which will require you to, spend some extra time looking for where this information is put up. To make it easier for you, go to our BSc India website. The top right corner, we have the provision to type the name of any company you want. When you type the name of a company, you will be directed to a page dedicated to information of only that company. In my case, this information in BS's website, the information is put up in a tabular form. So it makes it easier for us to compare and to study. In my case, I had put up, I typed Wipro Limited here on the top corner. When I typed Wipro Limited, immediately I am directed to a page that contains information of only Wipro Limited. The numbers you get here on our screen, the data, the information, all figures you get here on our screen is exactly the same data, same figures, same information you will get if you go to the website of Wipro. So all the data and information put up in BS's site is exactly the same that you will get in when you visit the website of the company. So make use of our website. It will help you save a lot of time getting information. Make use of our website. Get maximum information before you invest. At one particular college, when I was taking this session, I said minimum information that we expect you to get is the growth in the sales, growth in the profits, dividends. So one student asked me, Madam, what is the maximum information we should get? There is no maximum information. Get as much information as you can. Additional information, like every single additional information is good, and it will definitely help you analyze or know more about the company. Get information, additional information, like the expansion plans of the company, where they intend to open a new branch or a new factory, or if they intend to expand out of India. Get information like the top management, the decisions. What was the outcome of the decision they took last 5 years? Was it favorable for the company? So there is no maximum information. Every additional information you collect will be helpful for you to decide whether this company is good for the purpose of investing. So that is how, just by getting basic information and studying that information, you can very well decide whether to invest in that company or not. You don't need to apply any ratios or any formulas. But you see, I have nothing against ratios or formulas. If you know to use them, please go ahead and use them. But for those who don't know to use them, we have enough ways to help us invest in shares. Moving on to the next objective of our webinar, highlighting the mistakes that people make. In addition to that, I shall be putting across some other points that I want you to remember. First common mistake that most investors make in stock markets: investing in penny stocks. Penny stocks are those companies which is trading less than 10 rupee per share. So there are so many companies, we have so many companies, the market price of the shares is less than 10 rupees. 2 rupee 10 paisa per share companies are there. 3 rupee 50 paisa per share. One share costs 3 rupee 50 paisa. One share costs 1 rupee 75 paisa. So we have so many such companies. When you start investing in shares, lots of people will start giving you advices. Your friends will give you advice, your relatives will give you advice, your neighbors will give you advice, your office colleagues will give you advice, your people you know will give you advice, people you don't know will give you advice. From all corners, advices will come. One particular advice will be, you see this particular company? One share, only 50 paisa. 50 paisa shares are there, 50 paisa, 75 paisa per share. We have plenty of those companies. So you will get advice like, oh, this particular company, one share, only 50 paisa. I promise, you take my word, I promise, in 6 months' time, only 6 months' time, this company share will cross 5 rupees. You will be tempted. You immediately want to buy the share of that company. Why? Because your friend told you very convincingly, 3 times he said, I promise, it will cross 5 rupees. So you are, so immediately, I want to buy the share of this company. Secondly, you make a rough calculation in your mind. 50 paisa, for one share. If I buy 1,000 share, how much I have to spend? 500 rupees? 50 paisa into 1,500 rupees? Then you're thinking, 500 rupees. That's it. 1,000 share for 500 rupees. When I give birthday treats to my friends, I spend more than 500 rupees. Well, let me buy this share. No, 500 rupees. I'll get 1,000 shares. You have 500 rupees to spend? I will tell you how to spend 500 rupees. Better way to spend 500 rupees. You go to that close by fancy restaurant in your area, a fancy hotel in your area. They put those advertisements, those big billboards outside in front of the hotel. Lunch buffet, 500 rupees, tax included, all tax inclusive. Lunch buffet, 450 rupees, all tax inclusive. They put big advertisements outside the hotel. Okay, go there, spend 500 rupees, eat one lavish lunch. Better way to spend 500 rupees than to put in penny stock. You put that 500 rupees in penny stock, you will lose your money. So stay away from penny stocks. Always look for sectors that are growing, look for companies that are growing, look for companies that are changing. That is also important. The companies should change. The world is changing. Everything around us is changing. Company also should change. Let me give you an example. Many years back, a report had come in the paper. The report said, we have crude oil to last 40 years. Okay, the crude oil that we have in the world, this crude oil will last for 40 more years. After that, crude oil finished. So that was many years back. So right now, if you calculate, right now, if that report is correct, right now we have crude oil for 20 more years. Okay, because 20 years has passed since that report has come. So we have crude oil for the next 20 more years. That is why we have automobile companies. Now they are pumping money into research and development to bring out cars that will not depend on petrol and not depend on diesel to run. They are trying to come out with cars that can run on batteries, that can run on any other renewable source of energy. Tell me, my dear students, what will happen to a company who management is thinking, the management is thinking, oh, we will continue producing only petrol and diesel cars. What will happen to that company in 20 years' time? Company will close down. So, things around us are changing. This world is changing. The company also should change. Look for companies that are changing. Have modest expectation of returns from the stock market. Don't expect 200% returns from the stock market, 150%, 300%. No, stock market cannot give you that kind of returns in suddenly. You can expect on a yearly basis 15 to 17 to 20% returns. The good companies in India gives you around 15-20% returns. Expect that much from the good companies. The second mistake that people make in the stock market is expecting profits in short term. Now, stock market is a place to invest only if you are ready to keep your investments long term, and long term means at least 5 years. I am not saying after 5 years immediately sell your share. No. Keep it for 5 years, you will make money. Keep it longer, after 5 years you will make more money. What we see when among people who are investing is they want money quick. So they invest in shares. They want profits in one month, and they want profits in a short period of time. They buy today itself, they buy a share today, then today itself the stock market must go up. Tomorrow it must go up. It should never come down. That is not how the stock market functions. The stock market comprises of ups and downs, and let me make it very clear. No stock market professional, no stock market experts can predict which day the stock market will go up and which day the stock market will come down. Nobody can predict. One particular program when I was conducting, I told them that nobody can predict which day the stock market will go up, which day stock market will come down. So one particular student, he unmuted and told me, no ma'am, in my area, before we invest, we consult some card reader. The card reader will tell us which company to invest and which company not to invest. So I don't have any comments for that. You consult card. Some person will look at the card. Some uh, I think some he will make you pick a card. Then based on that card, the person will tell you, okay, now you invest or don't invest. So please, I can't comment much on that. Two, three students have told me this, that this is how they choose to invest. Well, no stock market professional can predict which day it will go up and which day it will come down. I'll give you a very good example. Not many years back, just a few years back, during the budget session, we thought that the stock market was going to crash. So the finance minister was announcing the budget, and our first what we when we were listening to the budget, what we guessed was today's stock market is going to crash. And we even called up our friends who are working in other, the stock markets to take their opinion. They also said stock market will crash. With this budget, stock market will crash. And guess what happened? Stock market went up. So that is stock market professionals. We got it wrong. All of us got it wrong. So stock market professionals. I'm sure many of you listening to me today were thinking all this time. You were all thinking stock market professional. Oh, they know whether the stock market will go up today, whether it will come down today. They know whether next 1 month what will happen in stock market. No. None of us know. But there is one thing we know. If you keep this share for 5 years, you will make money. I hope you all can see my hand. Can you see my hand? My camera is on.
Yes, ma'am. Yes, ma'am.
Okay, thank you. I will show you. Okay, I'll just take you to the graph for that. This is our BSc census graph. You see, BSc census graph consists of ups and downs, highs and lows. You cannot stop these ups and downs, the stock market moving up and down. So I will show you how the stock market moves using my hand. I'm going to show you how the stock market moves using my hand. Today you bought shares at this level. Okay, you bought shares at this level. Tomorrow the prices went up. You were happy. Day after tomorrow it came down. You got worried. And the day after that it came down still further. So it came down below your level. You bought at this level. It went up. That time when it went up you were happy. When it came down you worried. Then it came down again below your level. You panicked. Please stay calm. Stay calm. And then it went up, and then it came down, and then it went up, and it came down, and it came down again. Then it went up, then it down, up, down, up, down, down, up, down, up, down, up, down. After 5 years, stock market is here. You bought it at this level, Ups and downs did not stop happening. Ups and downs continued all through. After 5 years, it is now at this level. This ups and downs has an upward trend. So ups and downs will continue, but these ups and downs have an upward trend. So you don't have to worry about whether up and down in the short term. Keep the shares with you for 5 years and you will definitely make money. Don't panic sell. When we say panic sell, we are referring to selling off the shares during a stock market crash. It's called panic selling. So the stock market consists of ups and downs, and It consists of occasional crashes. Now the only problem is this TV channels. Okay, those TV channels, we have so many of them. When they are announcing stock market crash, they show you pictures. They show you pictures of they'll show you a picture of a man looking so, dejected in front of, he's looking at computer screen and he's looking so dejected. They'll show you a picture of a man stand with hand on the two hands on the head like this, and he's looking so miserable. When they are announcing the stock market crash, they show you so many depressing images. The same TV channels, when they are talking or reporting a stock market recovering the points it lost, they will not show you any image of a man smiling. They will not show you any image of someone, showing a thumbs up or two people giving high five to each other. No image is shown, no picture is shown. They will announce today BSE Sensex gained 650 points, and then they move on to the next story. They will, very quickly announce BSE Sensex gained 780 points, and next story is up. You see, images has a bigger impact on on us, and that also could be the reason why people think that stock market is a place where market crashes and you will lose money. BSE Sensex was introduced in the year on January 1st, 1986. On that particular day, when BSE Sensex was introduced, January 1st, 1986, BSE Sensex closed at around 500 points. In February this year, BSE Sensex crossed 52,400 points. How did BSE Sensex move from 500 to 52,400 if BSE Sensex is only crashing and crashing? So, the only way I can explain to you movement from 500 to 2,400 is I accept stock market crashes once in a while, but after every crash comes a recovery. After every crash comes a recovery, and that is the only way I can explain to you how BSE Sensex is moved from 500 to 52,400. So stay calm. Be prepared to hear news of stock market crash. At the same time, don't let that news affect you. Don't panic. And when you panic, you will end up selling your share, you will end up losing your money. No, don't panic. Stay calm. The stock market will recover. Stay calm. Never borrow money to invest in share. You can borrow money if there is a medical emergency in your family. You can go ahead and borrow money if you have to pay your child tuition fee. But not to invest in shares. Don't go and borrow money from relatives or neighbors to invest in shares. At the beginning of this session, I told you that we expect you to read about the company before you invest. We expect you to continue reading about the company whenever you get time. Not that every day you bought share of HDFC Bank. So every day you will read about HDFC Bank. No need. Once or twice a month, just read something about HDFC Bank. This will help you decide, or when you are going through the paper, if you see HDFC Bank news, read it. That is enough to help you decide, so that you are in touch with that company. You know what the company is doing. Never wait. Many investors will tell you, when I get 5 lakhs, then I will start investing. When I get 7 lakhs, the lump sum amount, 7 lakhs. Then I will start investing. My dear students, 5 lakhs, 7 lakhs, this is big money. This kind of money will not come to us every now and then. What we get on a regular basis is our salary. And we expect you to invest within your salary. You see, we are working middle class people. We get what we get is our salary. And in India here itself, we have so many investment options that suits us, that suits investors like middle class working people like us. And so how do we expect you to invest? How do we expect you to invest your salary? I will tell you. I will tell you how to invest your salary. And I hope one day you meet me. Why? Because I want you to thank me for telling you this. Okay, let us go back a few slides. Alright. We expect you to start investing from second salary onwards. Why did I say second salary onwards? Why did I not say first salary onwards? Because you see, we are Indians. We are very, we have tradition. We are very cultured people. I have lived in Kerala. I lived in Bangalore for 10 years, and now 2 years back I moved to Mumbai. Among the many things that we are very diverse. We are very different. At the same time, there are so many things that we have in common. So among the things that we have in common, Kerala, Bangalore and Mumbai, and I'm definitely sure in Tamil Nadu also. When we get our first salary, we give the first salary to our parents, or we give it to our grandparents, or we donate it to a place of worship. Something of that nature we do with our first salary. So first salary, very, very, very sacred, very holy. Let's not touch first salary. Keep it there. Aside. Second salary onwards. Put 1,000 rupees in bank recurring deposit. Put 1,000 rupees in post office recurring. Put 1,000 rupees in mutual fund. You see, in fact, to start mutual fund, you don't even need 1,000 rupees. 500 rupees is enough to start mutual fund. You remember our penny stock, the 500 rupees in penny stock? Okay, put it here in mutual fund. It will grow. It will grow. Okay, so let's say 1,000 rupees in mutual fund and put 1,000 rupees in shares. With 1,000 rupees, you can buy 3 shares of State Bank of India. State Bank of India shares, you can get 3 shares. One share of State Bank of India is around 330 or 350 rupees. So around 1,000 rupees is enough and you can get 3 shares. Full stop. Next month salary comes, repeat this process. 1,000 rupees in bank recurring, 1,000 rupees in post office recurring, 1,000 in mutual funds, 1,000 in shares, and last month we got State Bank of India. This month don't buy bank. Last month we bought bank, so this month don't buy bank. Buy something else. Buy software, IT company. Buy 1 share of Wipro Limited. One share is around 1,600 or 1,700. It's a little more than 1,000. It's okay. Buy 1 share. So there is no shame in buying 1 share of a company. Full stop. Next month, salary comes, repeat this process. 1,000 bank recurring, 1,000 in post office recurring, 1,000 in mutual fund, 1,000 in share. So we bought bank, we bought software. Now buy FMCG, buy ITC shares. 1 share ITC is 250 rupees. Buy 4 shares of ITC. 1,000 rupees, it will come to around 1,000 rupees. Full stop. After 1 year, that bank recurring will close. You will get a lump sum amount. Put that lump sum, open a bank fixed deposit. put the lump sum in a bank fixed deposit and start a new bank recurring. Don't stop investing. Don't stop investing. Start a new bank recurring. After some time, that post office recurring will close. You will get the lump sum. Open the second bank fixed deposit. Put it in that fixed deposit and start a new post office recurring deposit. Do not stop investing. And then one day, that 5 lakhs will come. We were all thinking, 5 lakhs, 7 lakhs. When it comes, split that 5 lakhs or 7 lakhs into different investment options that I have put up here on the screen. Put some amount in fixed deposit, put some amount in shares, put some amount in mutual funds. Split it across different investment options. So though I am representing the stock market, nobody will tell you to put all your money in stock market. No. When you are investing, you are supposed to spread your investment across different sectors, across different investment options. Shares should be one of the investment options. And within shares, we are expecting you to invest in different sectors. That is how we expect you to invest. I never invest based on tips. Never invest purely based on tips. There is no harm in collecting tips. Collect tips from TV channels or SMS. But before you invest, please find time to go online, get actual information about the company, know what the company is doing, then decide whether to invest or not. So you will get tips from SMS, TV channels, friends, relatives. Collect tips, no harm, but study, get actual information about the company before you invest. Stay away from people who say they will double or triple your money in a short period of time in stock market. Plenty people are there who will come to you with this scheme, doubling scheme, tripling scheme. Stay away. All investors who have invested in these schemes have all lost their money. So when it comes to losing money, the first mistake that investors make, investing in penny stocks, you will lose your money. The second mistake that investors make, expecting profits, impatience, expecting profits in a short period of time. They don't get profits, they will sell, then buy another company, wait, not getting profits, sell, buy, sell, buy, sell, buy, sell. At the end, they lose their money. Third mistake people make, selling during a stock market crash. You will lose your money. The fourth mistake that people make in the stock market, investing in this kind of schemes that people bring out to double or triple your money. These are the 4 mistakes that people make that resulted in them losing their money. So how do we make money then in the stock market? You not compromise, never compromise on the quality of the company. That company should be the best companies we have in India, doing very good business here in India. That company will help your money to grow. Secondly, when you are investing, spread your investment across different investment options. Let share be one of them. Within share, spread your investment across different types of companies. Invest from the very second salary onwards. Don't make it a habit to invest early. Invest every month. Make it a habit to invest every month. Invest for as long as you can. Keep the investment for as long as you can, and you will not lose your money in the stock market if you follow this investment principles strictly. You will definitely make money. This will bring me to the end of my session. I now keep this session open to the participants. Please feel free to.
Dear participants, so if you have any clarification, so please raise your question. You have any doubt and clarifications?
The students, anyone, if you have any queries, you please make use of, you can unmute and ask, or you can use the chat box to ask your questions.
Students, we have any clarification? Even in
Hello.
Tamil.
Good evening, sir.
Yeah.
Yeah, sir. So, ma'am, like I just want to know, it's myself, Soumya. So, I'm studying in St. Anne's College from Bangalore.
St. Anne's College, Bangalore.
Yeah, St.
Which,
Anne's College,
which St.
Bangalore.
Anne's? I know of three St. Anne's in Bangalore. The
Yeah,
Miller's
in
Road,
Alsur, ma.
Alsur,
Alsur.
Alsur
Yeah.
Police Station.
Yes,
Uh,
yes, yes.
Alsur Police Station. All
Yes,
right.
yes, ma'am.
Are you a commerce student?
Yes, ma'am. I'm a college student at MCOM now.
You're doing your MCOM
Uh,
now. So is
yes.
Veena ma'am your coordinator?
Yes, 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 ma'am.
Veena ma'am.
Yes,
Okay. And Nisha ma'am is your principal? That is it?
yes, yes, ma'am.
They're still there?
Yes, ma'am. Yes,
Yeah.
ma'am.
Okay.
Yes, yes, ma'am. So my question is like I've gotten like I don't know something about the stock market, and whatever you've told, I'm getting it much more relevant. My question, like I have a doubt about this backstop. There's some concept called a backstop.
Mm, I-
Backstop.
Back
Stop.
back stock.
Explain on that.
Soumya,
Like
Soumya,
see
can you uh, your voice is
yes, ma'am. Am I audible now?
yes.
Yes, ma'am. So, like, they say, like, we talk about these stocks that the company, the shares that the company provide. So, like, if suppose, I'm working in a company and if when should, like, if I'm working in a company, there's a concept called back stock. So,
Okay.
I've been hearing about this from many people, but, like, I don't know whether it is on the investor's part or the company's part to purchase a back stock.
To purchase a back stock.
Yes.
Uh, so I will just just say back stock. So I'm just checking. It is according to what it says here. It is the stock that has not yet been sold is
Okay.
called the back stock. The stock that has not yet been sold
Yes.
is
Yes,
what
ma'am.
we refer to
Yeah.
as the back
So
stock.
this is basically on the company's basis, right? So
Yes.
when should a company do a backstop? Like when it doesn't see any profit from the investors, or it doesn't see any investments that are made by the investors, or is it like when the company earns much more profit in the investments made?
So you are asking when should the uh, uh,
Company make a backstop, ma'am.
okay. Uh, when should the company make a backstop? Well, I am. Is it a buyback of shares? Are you referring to buyback of shares?
So yes, ma'am. So like my question is, I'm getting confused about what this backstop is. Like I've been hearing this in the stock market. Like like my brother has invested in stock market, and like both of us, are in partnership with that. So like we always have this thing telling that on the investment apps and all you get this that the company has backstopped. So I don't understand what this backstop is exactly.
Okay, so this would be the stocks that are not sold, not yet sold to the investors, not yet sold to the public. Is what we
Okay,
refer
so
as
it's
backstop.
basically like
So
they have not subscribed to the public.
yes,
Is it
they have
that way?
not. Yes. So
Okay,
when
okay.
will the company buy back the
Stock.
shares, the stock? Normally, when the company is in profits, is
Okay,
when typically that is when they buy back the shares
okay,
when they are in profits.
okay, okay. Got it, Martha. Thank you so much.
Welcome.
Any other question? Participants? Any other question? So even in Tamil, you can raise the question. Participants, you want to get any clarification?
Ma'am, good evening, ma'am.
Yeah, good evening. Please introduce yourself.
Ma'am, I am R.V. Kadiravan from Periyar EVR College, Tirchi.
Yeah.
Ma'am, I have doubt about what is meant by Nifty.
Nifty. Okay. Nifty is the index floated by NSE. BSC, BSC and NSE are the two stock exchanges we have in India. BSE and NSE are the two stock exchanges we have in India. BSE, we have our index that tracks the performance of the stock market. So the stock market, we have an index that will give you an idea about how the stock market is performing. The index that BSE has floated is Sensex, the BSE Sensex. It comprises of 30 companies. We study the performance of 30 companies, and based on the performance of 30 companies, BSE Sensex will be either up or down. Similarly, NSE, they also have an index which will give you an idea about the performance of the stock market on that particular day. NSE's index comprises of 50 companies. BSE is 30 and NSE is 50 companies. So NSE's 50 just combined it together became Nifty. NSE is 50. So Nifty is the index that uh, will give you, that is floated by NSE, the National Stock Exchange, and this index will give you a fair idea of how the stock market performed on that particular day. It is it is calculated. BSE, we calculate it by studying the performance of 30 companies, particular set of companies on that particular day. When it comes to NSE, they study the performance of 50 set of companies on that particular day. So
Thank
that
you,
is
ma'am.
Nifty. That is Nifty.
Thank you, ma'am.
Welcome. Soumya, are you still there?
Yes, ma'am. Yes, ma'am.
Okay, I was just checking online. So why do companies buy back their shares? So when a company is in need of money, they sell this. They offload shares to the uh, investors. So we have the IPOs, we have the follow-ons, we have the right issues, we
Yeah.
have preferential issues. That is, they are giving the shares to the investors. So the reverse is
Yes, ma'am.
buying back the shares. So it says here,
Okay.
I tried to Google to find out why should a company buy back the shares. So it says
Hmm.
here uh, to increase the owner's stake. There are many reasons. Okay, there are many reasons why a
Yeah.
company could buy back the shares. To increase the owners could increase their shareholdings. So
Okay. Okay.
owners have shares, investors
Hmm.
have shares. Now owners want to increase their shareholdings.
Okay. So
They buy
basically,
back.
more than having it diversified, they want it by themselves.
Yeah. So
They
they
want to
will have
have the rights. Okay.
they will
Yes,
have
ma'am.
one. That is one reason. Then the
Yes.
other reason is when the company owners buy back their shares. What it says here online, it improves the company's financial ratios.
Okay.
So
Yeah.
I don't know much about how to explain financial ratios and all
Yeah,
that.
ma'am. I got the point. Like it's basically like the profits of the company will they
Will
can
remain
retain
with
it
the
by
company.
yeah
Will
they can
remain with the
retain it
company.
with your further thing. If
Yes.
there are many investors, then it has to be
It has
provided
to
as
be
dividends.
divided
Yeah.
among the
Yeah.
investors.
So that yeah got it, ma'am. Yeah. Thank you so much.
Okay.
So, as participants, you want to raise any questions? Okay, if any participant want to give the vote of thanks in this forum, dear participants, if anyone want to give vote of thanks,
Yeah, sure, sir. Like,
yeah, come with your
it was a
video.
great session. Okay, video. Okay, sorry. Okay.
Yeah,
Hi, ma'am.
thank you.
Hi, sir. So yeah. So this is actually a great session that my personally for me, I had a
First,
lot
you
of
introduce
questions in stock
yourself.
market. Yeah, it's me, Soumya sir, from St. Anne's College, also Bangalore. So am I audible?
Yes, yes.
Yeah.
Yes, yes, you are.
So thank you so much, Ma, and thank you so much, sir, for arranging this session. So it's like it's reached a lot of people, like a lot of people who are interested have stayed back, and a lot of people, who weren't interested left. So that was a good sign, actually. It gave more of interactions. Like I had lots of things clarified. So I am interested in stock markets. I just want to invest, in the companies having shares. And then more than earning profit, it's just the way, you explore yourself into something. So, I wanted, I had personally asked my lecturers to arrange for a session like this where you can have an idea about the stock markets, like how they basically work. And, as a starter, like how do you invest into it, was my big question. Like now, I'm much more clarified about what exactly is the process and how exactly we're supposed to do. Like now I can confidently get into it, and I can make my investments. Like as you said, like shares are not the only place to make investments, and then you give us many ideas about where what investments can be made and in what basis can the investment be made. So this was a great session. Thank you so much, ma'am, and it's a pleasure meeting you. Thank you so much, sir.
Thank you, Sai Soumya. You have given a very nice vote of thanks in this
Thank you,
session.
sir.
So, really, very thank you.
Thank you.
Uh, okay. As a convener of this program, so I must thanks to the resource person, Maria Jose. She has given a very intensive explanation about the investments in stock market. I hope the participants were received some things about the investments in stock market from her lecture. So really, on behalf of the Periyar EVR College Training and Placement Cell, my wholeheartedly thanks to all the participants, resource person, and all other people, those who are directly and indirectly associated with this wonderful webinar. So the feedback link posted in the chat box. So you can submit the feedback link. You will receive the certificates. The certificate can be generated only 100 per day. Those who are not able to get the certificate today, so it will reach tomorrow. So you need not send any message or call regarding this matter. Definitely you will receive the certificate. If any mistakes, if you are not able to receive any certificates, so before you are going to fill the feedback form, you must check your mail ID. Sometimes you might mistakes in your mail ID, so you will not receive any certificate. So that you must be very careful while filling the feedback form. So with these things, I thanks to all for these nice opportunities. Thank you, one and all.
Sir, I would also like to thank
Yeah.
the management, the principal of Periyar EVR College for giving me the opportunity to address the students. I'd like to thank all the participants who joined the session. You made because you joined, you made the session you made the session a success. Because you interacted, you made the session interesting. So thank you all for joining today. But today, I want to place my heartfelt gratitude to Dr. C. Paramam Shivan, sir, for giving me the opportunity to address the students. Thank you so much, sir. Thank you very much.
Thank you,
sir.
madam. So
For
we hope
giving
in
opportunity.
future also we will organize many programs
Sir,
for the benefit of our students community.
sir.
Even today I have received one mail from NSTL regarding certification on capital market like that.
Yes.
So if you is there any idea about this kind of course at free of cost, because it is the government college.
Yes.
Our students are socially, economically weaker section people. So we want to provide only free education, free programs. So is there any programs, free programs like a certification course or this kind of webinar? So you kindly share information to me.
I will see.
We will conduct some more program for the benefit of the students community. Even is there any program exclusively for commerce and management students? That also we can do it. Or in general program, or even for the faculty members. That means those who are earning people, the people are earnings. They need to create some awareness about the investor, the stock market. So that kind of program also we will organize in future. So we will keep in touch. Yeah. Thank you for your nice presentation, madam. It's my personal information. Thank you, madam. Thank you. I will wind up the meeting, madam.
Yes, sir.
Okay, thank you.
Shall I exit the meeting?
Yeah,
for
yeah, madam.
permission?
Yeah, thank you, madam. Thank you.